Okay, so the next, can we jump into log charts, logarithmic charts?
Yeah, and let me tee you up here for this one
Okay,
because I am very anti-chart.
okay.
I don't like looking at charts. I think they just add complexity for me when, again, I'm pretty simple. It's like those three things, and then how are the vibes? And if the vibes are good, then I'm like bullish, and
hmm
vibes are always good. But I understand that there's a place for charts and for actual like deep rooted analysis. So I'm very much looking forward to this part of it because I'm hoping to learn something in not just looking at like a zoomed out chart, because that's typically the chart that I refer to people whenever they're like, oh my god, look at Bitcoin, or look at the this altcoin versus Bitcoin chart, and I'm like, yo, like, zoom out 5 years, zoom out 15 years.
So that's what I want to go over. When you look at charts, are you looking at a regular scale or a log chart?
Yeah, just regular, very
Okay,
very
okay, okay.
very
Because
surface
this
level.
is
I
going to
am
be an
as
unlock.
I am as like nascent as it comes when it referring to like any type of technical analysis. I mean, I took a few finance classes in
Yeah,
college, but it's never been my forte. I've never been a number crunching guy. I mean,
yeah.
there's different analytics that I like to look at. I'm not a total vibes guy, but there's maybe I can superimpose it in the right here in the next or in the edited version of this. But there's a meme that I send to my brother all the time when we're talking about fantasy baseball, because he's very stats driven and I'm
hmm
very vibes driven. So I'll share the meme. You'll see it right here. It's like silence data driven decision maker, vibes guy is talking. And that is my approach, for better or
Yeah.
worse.
Okay, okay. Jack, this is really going to be helpful for you, I think. I hope, because the log chart really was a big unlock for me. Okay, so James Lavish sent out a really great email this week that I want to heavily reference because I think he did a really, really good job of breaking down the importance between a regular chart and how, in a lot of cases, it's not that helpful versus a log chart, which helps you zoom out and take perspective and see it all in perspective. So zooming out for a second before we get into charts, just about every major technological revolution, whether it's the internet and e-commerce, digital money like Bitcoin, AI, it follows a predictable and it's sometimes painful market pattern of boom, bust, disbelief, and then dominance. And it's known as an adoption curve or an S curve. Disruptive technologies do not tend to grow linearly. You've got the innovators, the true believers, and then early adopters. Then you got organic traction accelerating, and then mass adoption, and finally the last believers or true skeptics. And it can be volatile at times. And I want to share my screen. This is the screen share part. And we're going to talk about Amazon. We're going to reference Amazon here for a second. Here we are, screen share. Let me know if you can see that.
Yep.
Okay. 1999. After surging to $113 in the dot-com boom of late 1999, Amazon collapsed to $5. 95% drawdown. Okay? And prices were swinging wildly, not necessarily because it's a bad company, it's a bad asset, the asset is broken, but because the world had not caught up yet to this new thing called the internet and e-commerce. And the same adoption phase volatility has hit almost every other exponential technology, like electricity, automobiles, the internet, and Bitcoin. We've seen 4 drawdowns of 80+%, and yet Bitcoin is still the best performing asset of the last 15 years. So volatility is not a sign of failure. It's just the natural result of what James calls exponential potential crashing into linear expectations. And it's really only obvious to those who are consistently zoomed out. And it's a necessary byproduct of exponential potential. So the problem here is that linear price charts create challenges when analyzing assets that compound. So a $20 move near $200, which is 10%, visually towers over a $2 move near $20, which is also 10%. So the mathematical significance is identical, but the result is an optical illusion. The more successful an asset becomes, the more its recent price action dwarfs everything that came before it. I'll show you the next chart. Amazon at regular scale. Look at what's fascinating. If you look at the bottom left corner here, look at 1999, the 95% drop. Can you see it?
It's a blip.
It's like
It's a blip.
the last thing I would ever recognize on this chart.
I mean, yeah, just there's that. I would imagine that's a 2020 drop and then quick recovery, but on the right. But yeah, when you go back to the early days of Bezos and Amazon, that just looks like a gradually then suddenly.
Yes. So the dot-com surge and the collapse of 99 looks like a massive failure in the first chart, right? It's up and then way down. But then when you go to the long-term picture, it's like, tiny little blip. So here's gold at a regular scale. Here's Bitcoin at a regular scale. What's interesting, though, is that the early cycles that defined Bitcoin's adoption, 2011, 2013, 2017, almost disappear into barely little like ripples when the most recent price overwhelms the frame, which is basically scale bias, right? Like you look at this chart and it barely even is, showing.
And
were you gonna say something?
Well, just to kind of further that point there, it's funny because a lot of people, and there's been a lot of discourse during this bull cycle about how, these new all-time highs are boring.
Yeah.
And people are kind of just scoffing at $115,000 Bitcoin or $120,000 Bitcoin. But to what you were saying, that's a $5,000 price movement. So it's only a few percentage points, but that's that bias, right?
Yeah.
Of like, oh, we're not 100xing in a day. No, but you're going up in that value, which increases the market cap of Bitcoin by like an insane amount. So that's just another way to think of it.
Yeah. So the linear price chart shows absolute dollars rather than proportional change, which is the huge unlock for log charts, right? So the regular scale, it exaggerates the drama of maturity and it trivializes the effects of early compounding. Jack, do you think we're still early?
I'm gonna say we're still early until I'm like, we're always early.
I know,
honestly, but actually, we are always. Sorry, I think I got a little loud there. We are always early because it's just a better way to save. Over time, your purchasing power will increase no matter how expensive it is, and you can buy a fraction of a Bitcoin. You could buy just 10,000 satoshis for what? $20 or whatever it is, and that will be worth more in 5-10 years from now than it is today.
Yes, 100%. So I agree. A 60% drawdown, going back to this, let's see, let's go to Amazon. Okay, a 60% drawdown early in Amazon's life and a 60% drawdown decades later are identical in risk terms, but one is a tiny wiggle while the other one is a canyon on a linear regular chart. Okay, investors looking at the picture, not math, conclude the later event is categorically worse, and they make it easy to believe that nothing happened for years and then everything happened at once. In other words, gradually then suddenly, which is a great storyline for short sellers and skeptics. So what's the solution? Linear charts are an optical illusion for compounding assets and are the corrective lens. I love going to linear charts and looking because it just gives this zoomed out perspective. Amazon, now look at this chart, the log version, it shows 1999. It shows the drop, right? But it shows in perspective. It's just generally up and to the right. So a move from $10 to $20, which is a 100% gain, takes up the same vertical distance as a move from $1,000 to $2,000, which is also 100%. And likewise, a 50% drawdown is the same vertical drop, whether it happens at $20 or $200,000. So there's gold. This is gold on a log chart. That title's wrong. And then here's Bitcoin on a log chart. Okay. And it's not that linear charts can be useful if you're like a day trader or whatever. But when we talk about accepting a form of money that stores value over time and saving in a form of money that stores value over time, I think the log chart is so much more helpful because it shows in context the adoption of new technology in the context of long-term price action, and it contextualizes it. Now, here's another mental unlock. Here's another one, which is log, also known as the power law. It takes a logarithmic chart of the logarithmic chart, and the red line is the log. That's the power law. So it literally just turns it into just a straight line. So if you go, is Bitcoin too volatile on a log, it's just like, it's a straight line. There's no volatility at all, right? It's just always up and to the right. So basically what you see here is the full history of Bitcoin and how it has tightly followed this predictable curve, and how the price has steadily climbed along this path for the last 15 years. Now, I'm going to stop sharing my screen. what is the price kind of a reflection of? The power law thesis is that it's actually network adoption, and price is following network adoption. And so if you say, well, macro event this, macro event that, what some country did or did not do, well, ultimately, adoption is increasing each and every day. Knowledge is increasing. People understand the difference between crypto and Bitcoin. People understand the difference between a truly decentralized, insert all the many, many things that make Bitcoin so unique and the properties that make it so incredible and unique. And it increases adoption. And I believe adoption will continue, right? And that price will follow adoption. And James believes, based on the chart, that we will likely see, I don't really want to make any price predictions, but he says between $250,000 to $1 million sometime between now and early 2030. Nobody knows when that is. Like, the model doesn't predict perfectly, what Bitcoin will do next week or next quarter. But the general roadmap of overall, it's always up and to the right. I think that the log chart can be helpful.